For more on Netflix, let's bring in analyst Rich Greenfield, the co-founder of Lightshed Partners, who's been listening into our conversation. So, Rich, let's first, if you can walk us through sort of the technical aspect of the quarter, and that is the big pop in ad revenues and then the inline in overall revenue. Can you sort of walk us through that math?
Look, I think the reality is Netflix is focused on growing average revenue per member. They call it ARM. It's basically ARPU in every other company. Doesn't matter where the revenue comes from. I mean, they're offering an ad tier now. They're telling you about 30% of subscribers are taking it. For Disney, I think on the last call, they said about 40% of their subscribers are taking the ad tier. I mean, remember, Melissa, most people who have the moochers, who are the password sharers that are now shifting over, most of them are still choosing ad-free. Like, people are used to Netflix being ad-free. They're used to Disney Plus. I mean, I think people like ad-free content. You'll see more and more advertising-based subscribers. It will take time. But I think the real message here is investors shouldn't care where the revenue comes from, advertising or subscription, however it works out. The key is Netflix is now growing revenue, double digit. Margins are going back to 20%, generating $6.5 billion for free cash flow, while everybody else is literally running for cover, under pressure from activists, trying to stay alive, like cutting back on programming spend, trying to raise price dramatically to improve profitability. Nobody else is investing. I mean, it really feels like Netflix this quarter is running away from the pack.
So he's in the pants off camp. Yeah.
Pants off, yeah.
Yeah. But so it's Karen, thanks for being on today. Obviously, you've been very bullish. You had a big number, big target rather, going into this print. How do you get there? How do you think about how to value this business?
I think the reality is you're seeing it, right? They are dominating. I mean, they're almost at 250 million users globally, and they're just getting started. I mean, they still only have 40 plus million-ish subscribers in Asia. That number is going to be hundreds of millions over time. So there is still a tremendous amount of long-term runway. But I think the big news today, I mean, I know everyone's focused on earnings, but that really is the smaller story in my mind. The big news is John Lasseter, the chief creative officer of Pixar, who's created almost all of the films that you, your family, and friends love, is now working long-term with Netflix. Skydance Animation has moved its animated films over from Apple TV Plus to Netflix exclusively for years and years to come. That is animation is the one category Netflix has not done a good job in. And I think they would admit it. This is a huge, bold move. There's two animation companies, right? There's Disney and there's Universal. Universal has certainly taken that crown over the last few years. I think it would have been unimaginable to put Netflix in the same category as Disney and Universal Illumination from an animation standpoint. And I think today you can do that, Karen.
So, Rich, if you look at Netflix, they're the pure play. They're the leader of the pack. They're running away from the herd, as you just said. Who is the first in that herd that's chasing them?
I mean, look, Disney's by far the best position to be number two. I think the real question is, what exactly is Disney trying to create? Obviously, Bob Iger spoke on CNBC in that, sort of epic David Faber interview from Sun Valley several months ago, talking about sort of how they're going to strategically shift. Are they keeping ESPN and ABC? They're obviously buying Hulu soon for Comcast, probably for a much bigger price than the $9 billion Disney would like. I mean, this is a pretty important strategic asset to Disney. It's hard to imagine it's not a 13, 14, 15 billion type number to Comcast. And so what do they do with Hulu? How do they fold it into Disney Plus? What happens to ESPN? How does that go over the top? Like, whether or not Disney focuses on what they're good at, which is family entertainment, or they try to be much, much broader and try to take on Netflix globally, I think that's still the big unanswered question facing Iger and Disney over this next 12 to 18 months that investors are really trying to figure out. And look, it's why Disney stock is at a 12 or 13 year low, is I think people are really struggling to figure out, what does Disney look like in 1, 2, 3 years? What's the earnings power where it is today? It feels like there's a lot of pressure. Someone mentioned before I came on sort of the challenges facing the linear TV business, cable and broadcast networks. That pressure isn't going away. It's going to intensify over the next couple of years. And so Disney would be that strongest challenger. But I also think you can't count out WBD. I mean, I think, David Zaslav, you certainly have a great brand in that content. The question is do they have the balance sheet, and can they, they're reducing leverage, but can they get to the point where they can actually build and invest?